There are a number of inefficiencies within the traditional financial system. In the near term, as has been discussed, efficiencies in international payments, immediacy of payments. I think those are clearly things that where there's opportunity. I think longer term, certainly blockchain assets afford the opportunity for a more secure and efficient store of value and wealth. And over time, you would envision that through smart contracts and other efficiencies, that more wealth will gravitate to digital assets because it will just be the more efficient place to retain and grow them.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. Today, we are going to be diving into fundamentals, video clips, and show you all that DeFi is continuing to level the playing field for retail investors. Now, we already know, and in previous video breakdowns and in this one, we are going to continue to show that the world's largest institutions are embracing DeFi to earn yield on their digital assets. And now, we as retail investors have the opportunity to do the same, where we can earn more than ever compared to the old traditional financial way of investing. In today's video breakdown, you're going to see why it's so important to be educating yourself about DeFi by joining mentorship programs, doing research, and enlightening yourself on the opportunities at hand to move with the changing times. So we're going to be jumping into fundamentals and diving into video clips today. If you guys enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe. Always showing you guys the realest information that the largest organizations that a lot of people know about in this digital asset space are fixating their attention on earning a yield on their digital assets. So many in the crypto space have no idea that these opportunities exist. And so we're going to continue to enlighten you all so that way you can keep, maintain, and expand your digital wealth instead of selling your digital assets for fiat currency. Again, that is an old, outdated mindset. The times are shifting and things are changing rapidly in this space. We need to be able to move with those times, grow our wealth, expand our wealth, and maintain our wealth long term. And that is how we are really truly, as retail investors, going to experience this massive wealth transformation and flourish from it. Okay. And it is all going to require you as a viewer, as a follower of CYPRX, to really persevere and push for your education. All right. So let's jump into today's video clip. We have a whole bunch of fundamentals. I want to start with this video clip. We already know that financial institutions and smart money are interested in fixating their attention on earning yield.
First glance say, well, that just means it's not as attractive to institutions. That's not really the case. Institutions are smart money. They'll go to where the yield and the returns are.
So what's happening now that I think, okay, this price uptick, other changes in the environment are going to make for things that will succeed 5 years from now, because that's our horizon. I think a lot in DeFi.
There are a number of inefficiencies within the traditional financial system. In the near term, as has been discussed, efficiencies in international payments, immediacy of payments. I think those are clearly things that where there's opportunity. I think longer term, certainly blockchain assets afford the opportunity for a more secure and efficient store of value and wealth. And over time, you would envision that through smart contracts and other efficiencies, that more wealth will gravitate to digital assets because it will just be the more efficient place to retain and grow them.
Digital assets will be a much better and more efficient way to retain, grow, and store wealth. And you also heard some perspectives from other institutional industry-leading experts talk about DeFi, the time horizon exceeding 5 years from now. And also that smart money is interested in earning yield or yield-bearing opportunities. You cannot make this stuff up, and it is exactly why here at CYPRX we are attempting to push for this education for the masses, because so many people are slacking on understanding DeFi and the opportunities that it has to offer for us as retail investors that have been pretty much siloed from very large investment schematics in traditional finance. For example, real estate. Right now you have real world asset tokenization and micro investing, where with very small micro amounts of capital, retail investors can get into some of the largest real estate properties and start earning yield by owning very small portions of these properties. That's not what today's video breakdown is fixating your attention on, but still understanding those opportunities exist now and are open to everybody with a mobile device and an internet connection is insane knowledge. And so many people, again, lack that knowledge. So we are here in an attempt to enlighten you all. Now, we're going to start here with this post. This was phenomenal to see. I think I shared this before, but this is one of our private CYPRX community members in the CYPRX Wealth 28 Club. And they went on to say here, a big shout out and thank you to myself, Mr. Aquaman, and Mr. Man XRP for helping me get my head around and understand how to do what I've always wanted to be able to do, but didn't have the knowledge to do it. Last month, I earned $2,000 in DeFi, and then he hashtagged the Wealth 28 Club. Now, Mr. Man XRP, if you guys do not follow him on X, I highly suggest you do so. He went on to reply to this and said, another successful person willing to be ahead of the curve and deciding to learn DeFi. DeFi is here for the long run, as you heard that institutional perspective from the representative sitting on stage 5 years from now. And he also said that it's baked right into the banking infrastructure, which is not a lie. Here is a document where you can see it reads, I'm not going to read the entire thing, but it talks about how, in contrast, tokenizers create tokens that represent various assets such as claims, values, or rights. Fiat-backed stablecoins are tokenized shares on a DLT network and are typically centralized providers. In a DLT network, miners and validators also function as issuers, receiving newly created crypto assets as rewards for validating and proposing blocks, thereby maintaining and securing the system. And you can see what they mention right down here in the screenshot. It is a little tiny snippet of how they're building out the core banking infrastructure. And you can see that they are including DeFi into the back end system. Okay. This is physical proof that these large financial institutions are 110% not only integrating crypto into their core banking infrastructure, which we've also shown you video clips of, institutional participants on stage openly admitting this.
So Matthias, from your perspective, how is it looking like for the traditional financial systems to be able to build this new infrastructure and integrate it well?
Varus, of course, has an important part to play as well there. Yeah, on the side of the banks, as we are quite fortunate, as I mentioned, many of the traditional banks are now already adopted cryptocurrencies into their core banking systems. Many of the traditional banks are now already adopted cryptocurrencies into their core banking systems.
But that they are also incorporating DeFi. Okay. Now, let me enlighten you guys a little bit further. We're going to take you all to some updated fundamentals. January 2nd, 2025, as of time of recording, it is the 12th. Okay. I don't know when I'm going to be able to release this video breakdown, but as of time of recording, this fundamental piece is only 10 days old. And look at what it reads. Real world asset integration with DeFi could grow the market 10x, Securitize CEO says. This is so massive. It's honestly difficult. By the way, this individual, Securitize's CEO, Carlos Domingo, okay, it's honestly difficult to recap the biggest narrative of 2024 simply because there was so many. But if we were to engage in that exercise, then I'd have to say that tokenization and BlackRock's grand entrance into crypto would be on the list. He said right down here, if you look at the pace that we're going to grow, the treasury space that by itself should grow to several $1 billion next year, because stablecoins are at 200 billion right now. So that should be 10 to 20 billion in treasuries. And then you start adding some of the new products that we're going to roll out, rolling integrations with DeFi, etc. I think aggregating the industry should get to 50 billion within the next 12 to 18 months. And then right down here, he also said, for Domingo, the big catch is the aforementioned integration with DeFi, says it right here, which is what Securitize is exploring as its next venture. He said that is going to make the industry grow 10x. That's my personal view, but it'll be good for both real-world asset tokenization and DeFi, which will be able to feed off each other's success. So this is coming directly from Securitize, a very large institutional participant, directly mentioning how TradFi is going to be integrating with DeFi, and that this is something that is going to grow the market share exponentially, which is, again, why you guys should be paying attention. Now, our CYPRX researchers, shout out to the CYPRX research team. If you guys don't follow them on X, make sure that you do so. They are always dropping non-biased, non-opinionated, good, valuable research. They shared this document, the coin shares 2025 outlook. And I only want to read one little tiny snippet. So if we come over here and we scroll down to page 5, it says corporate treasury integration and yielding strategies are on the rise. Would you look at that, right? So let me zoom in a little bit more for you guys so you can actually see it, because I know the print is a little tiny. It says here, companies are increasingly using Bitcoin as treasury assets with yield generating strategies, a trend likely to accelerate in 2025 as regulatory frameworks stabilize. Regulatory clarity is one of those key things that are sidelining a lot of current crypto market participants from participating in DeFi because they're afraid. Now, you don't have to go and risk your digital assets and expose your crypto to DeFi to learn about DeFi. You can take a course, you can join a mentorship, you can do research, you can read articles, you can watch panel discussions, which is exactly what we push for here at CYPRX and why we created the Wealth 28 Club. If you join the Wealth 28 Club, you don't have to deploy your digital assets to get involved in DeFi, but at least take the course, take the university. There's over 200 video breakdowns that will educate and enlighten you all on the opportunities that you now have at your fingertips. So that way, when you are ready to use them, you can. You're efficient enough in your knowledge base and your knowledge curve to go and deploy and start earning yield or create your own yield-bearing strategy. To continue the piece of this document, it says, this shift could see traditional firms not only hold Bitcoin, but also leverage it to enhance liquidity and shareholder value, with Bitcoin yielding strategies becoming a new corporate finance normal. That is massive. Okay. And this goes in line with everything that we've been attempting to show you guys here at CYPRX so far. If this is your first video breakdown at CYPRX, then pause this video, do us a favor, go back and watch the yield playlist on the CYPRX YouTube, and it will enlighten you about pretty much everything that we're talking about up to this point. Next, we're going to get into this fundamental piece, which is from an article that I posted to you guys on January 9th, 2025, so relatively recent, where I said, reshaping DeFi. People still think DeFi is a scam when the largest participants are using it. Largest participants being a BlackRock, Securitize, whom at which you just saw a direct quote from the Securitize CEO mention that DeFi is going to be one of the things that grows the market share of the digital asset space exponentially over the next consecutive couple of years, merging TradFi and DeFi together. This is a strategic partnership between Usual, Athena, and Securitize, the tokenization platform for the BlackRock USD Institutional Digital Liquidity Fund, or BIDL, is reshaping DeFi by combining liquidity, yield, and composability. And it mentions how this is the Holy Trinity, right? Which I find interesting. And it says the rapidly evolving landscape of DeFi, a new alliance emerges to redefine what is possible. Together, they form the Holy Trinity, designed to drive a DeFi and stablecoin renaissance, enhancing stability, maximizing yield, and optimizing liquidity across both TradFi and DeFi ecosystems. This is so massive. This is literally 3 of some of the largest organizations on the face of this planet coming together and say, like, this is who cannot see it after this? That's the world's largest financial institutions are 110% interested in DeFi and yield-bearing opportunities. So why, as a retail investor, would you shun this away? Would you be like, no, this isn't possible. This isn't what they're doing. It's right here for you guys. They're very open and they talk about this stuff and they post this stuff not only on X and in fundamentals for you guys, but they have panel discussions that are public, and they talk about this quite frequently and often on their LinkedIn profiles. Let me show you guys what I'm talking about. So this was posted from Bitwise. Okay, let me show you guys kind of like a level playing field opportunity where both retail and institutional investors have access to the same yield through DeFi bearing opportunities. Check this out. Bitwise Europe, or formerly ETC Group, posted just a couple of weeks ago on their LinkedIn profile. Aptos is currently among the top 25 most valuable crypto assets globally and has experienced substantial network activity growth since its inception, in October 2022. Recently, Aptos has garnered significant attention from leading financial institutions and major consumer brands, leveraging its cutting-edge infrastructure. And if you come down here, it talks about learning more about the ETP, the Aptos ETP, institutional grade custody by Coinbase Institution, and it gives you a link to click. Well, when you click on that link and you come over here, what does it take you to? It talks about staking and it talks about earning yield on your Aptos through this ETP and staking. These financial institutions can hold this digital asset and earn yield. Now, how much yield are they earning? And again, this specific example is not anything significant, but it still shows you a level playing field. Down on the frequently asked questions, it talks about how and what the return is guaranteed by Bitwise Aptos staking ETP. The underlying Aptos that are staked, hence generating additional returns for investors, and is in accordance with the APT staking market rate. So what is that staking rate? If you go over to Coinbase, here it says you can earn rewards for Aptos through DeFi yield. And it mentions that the staking rate for Aptos is 7%. So we right now as manual retail investors, even though 7% is not a lot, and again, like I said, this is just one opportunity, have the ability to invest in these digital assets, which can benefit from price appreciation and at the same time earn yield while we're waiting for all of that price appreciation to unfold. And what I just showed you guys is that institutions are heavily interested in earning yield in their digital assets. So as more institutions pile in and this market share grows exponentially, not only are we going to benefit from price appreciation of these digital assets, but we are never going to have to sell them for fiat currency because we're consistently earning yield on them, which we can then go and turn into that fiat currency or stable coins that we want to pay ourselves with. Do you guys see how massive this is? And you all have an equal opportunity to this. If you go over to Everstake, Everstake is a platform that we covered in a previous video breakdown. It talks about how you can do this as a manual retail investor. It talks about the Petra wallet right here on their platform, which then you can go over to their website, download, and I'm assuming, I have not done this, but I'm just showing you guys as an example as a retail investor, how you can stake Aptos and you can earn the same exact yield that traditional financial players have access to, right? So with today's video breakdown out of the way, I just wanted to show you guys again that now is the time to enlighten yourself on DeFi bearing opportunities. This was an opportunity, a yield bearing opportunity that hovers on the low end of the yielding opportunities that you have access to in DeFi. 7% is minuscule when it comes to the DeFi landscape. And I mean, there are some platforms that offer exponential yields, and I'm not saying to chase those or gravitate towards them, but once you understand the layout and you understand the opportunities at hand, the possibilities that you can accomplish in DeFi with your digital assets without having to sell them for fiat is exponential. So with that being said, I hope that you all enjoyed today's video breakdown, really just enlightening you all on the level playing field that is being created behind the scenes that so many people in crypto right now neglect to understand because they're afraid of these new technologies. They don't understand them. They think that the space is too unregulated to get involved with. You don't have to deploy your crypto into the DeFi ecosystem to get educated about DeFi. Do your research, join like-minded communities, join mentorship programs, watch panel discussions, read these fundamental breakdowns so that way you are enlightened about how to get your digital assets working for you so that way you can exponentially grow your wealth, not only in the now, but after the next bull market cycle, never having to sell your valuable digital assets for fiat currency, a decaying, dying, paper-based, old, traditional, clunky, outdated system, right? Fiat, and continue to participate in this massive wealth transformation. With that being said, many blessings to you guys. As always, make sure that you're conducting your own personal research, and anybody that wants to take advantage of some of the information that we offer in the private CYPRX community, you guys can head over to CYPRXtrading.com. We would love to have you on the team. Many blessings, and I'll see you guys in the next video breakdown.